Here is the question every crypto investor is asking this morning: what actually happens to your tokens when the firm behind them files for bankruptcy? On the 21st of July, 2026, Mvmt Labs, the company behind the Mvmt blockchain, filed for Chapter 11 bankruptcy protection in the United States. Within hours, the Mvmt token hit an all-time low, wiping out the value held by thousands of retail investors almost overnight. This is not a distant or abstract news story. If you hold Mvmt tokens, this filing directly affects you right now. And if you do not hold Mvmt, this case is a sharp and timely masterclass in the warning signs that precede a token collapse. In the next few minutes, we are going to walk through exactly what happened, why it happened, and what comes next. Stay with us, because the detail here matters enormously for anyone with money in the crypto market today. To understand this collapse properly, you need to understand what Mvmt Labs actually was. The firm was the organization behind the Mvmt blockchain, a Layer 1 network that positioned itself as a high-performance, developer-friendly alternative to established chains. The project used the Mvmt programming language, originally developed by Meta for its DM project, and promised greater security and execution speed compared with rival platforms. Mvmt Labs, the entity that filed for Chapter 11, was the operational arm driving the project forward commercially. For a period, the Mvmt ecosystem looked like a credible contender in a crowded and competitive market. The Mvmt token launched with significant hype, and the project built a genuine community of developers and investors who believed in its long-term potential. Understanding this background is essential, because it explains why the collapse has landed so painfully for so many people who trusted the project with real money. The Mvmt token's descent to an all-time low did not happen in a single moment in isolation. Token collapses of this nature typically follow a recognizable pattern: declining developer activity, falling trading volumes, growing negative sentiment from influential voices in the market, and then a triggering event that causes a rapid and severe sell-off. In the case of Mvmt, the Chapter 11 filing by Mvmt Labs on the 21st of July, 2026 appears to have been that triggering event, with Yahoo Finance confirming the token reached its all-time low on the same day as the announcement. When a founding firm files for bankruptcy, it sends an unambiguous signal to the market that the project's operational capacity is severely compromised. Liquidity dries up, confidence evaporates almost instantly, and holders rush to exit whatever position they can. The market data for Mvmt is reflecting exactly that dynamic right now, as of today, the 23rd of July, 2026. A critical question in this story is why Mvmt Labs chose Chapter 11 bankruptcy rather than a straightforward liquidation under Chapter 7. The distinction matters a great deal for everyone affected. Chapter 11 is a form of bankruptcy protection in the United States that allows a company to continue operating while it restructures its debts. It is not the same as closing down permanently. The firm files a reorganization plan with the court, creditors vote on whether to accept it, and the company attempts to emerge in a leaner form. Chapter 7, by contrast, involves an outright wind-down and the sale of all assets to repay creditors. The choice of Chapter 11 by Mvmt Labs suggests the firm believes there is still something worth preserving, whether that is the blockchain protocol itself, intellectual property, or existing developer partnerships. However, for retail Mvmt token holders, that distinction offers very little immediate comfort at this point in the process. The impact on Mvmt token holders is severe and, based on historical precedent, unlikely to improve quickly. With the token at an all-time low and the issuing firm in bankruptcy, the realistic short-term outlook for recovering value through the token alone is bleak. This is not the first time the crypto market has followed this exact trajectory. Terraform Labs, the firm behind the Terra USD and Luna tokens, filed for bankruptcy in January 2024. Celsius Network, the cryptocurrency lender, filed in July 2022. In both cases, retail investors suffered significant losses while institutional creditors with secured legal claims received priority treatment. The Mvmt Labs case is following a familiar path. Beyond individual token holders, the broader market impact is also significant. When a high-profile Layer 1 project collapses, it erodes developer confidence across the sector, and the teams who had been building applications on the Mvmt network now face serious and immediate uncertainty about the future of their work. It is worth stepping back and looking at what the Mvmt Labs collapse tells us about the current state of the cryptocurrency industry more broadly. This is not an isolated event. Multiple high-profile crypto firms have filed for bankruptcy in recent years, from Celsius Network in July 2022, to Terraform Labs in January 2024, to another unnamed firm filing in February 2026, and now Mvmt Labs in July 2026. Each collapse shares common features: a token marketed aggressively to retail investors, a period of rapid growth fueled by speculative interest, and then a loss of confidence that triggered a damaging downward spiral. The pattern strongly suggests that the crypto industry continues to struggle with a fundamental tension between the hype required to attract capital and the operational reality of building financially sustainable blockchain infrastructure. For any investor active in this market, that pattern is the most important data point of all. If you hold Mvmt tokens, you are almost certainly asking whether you will see any return from the bankruptcy process at all. Here is an honest answer based on how these proceedings actually work. In Chapter 11, the court will either appoint a trustee or allow the firm itself to manage the restructuring as a debtor in possession. Creditors file claims and are ranked strictly by legal priority. Secured creditors, those with formal legal claims over specific assets, come first. Unsecured creditors come next. Retail token holders typically fall into a legal gray area, as cryptocurrency tokens do not fit neatly into existing creditor categories under U.S. bankruptcy law. In previous crypto bankruptcies, including the Celsius Network case, token holders received a fraction of their original value after months or even years of legal proceedings. The Mvmt Labs case is likely to follow a similar timeline. Anyone expecting a quick resolution should prepare for a protracted process. Looking ahead to the near term, the outlook for Mvmt Labs and the Mvmt token remains genuinely uncertain. The Chapter 11 filing does open the door to a potential restructuring or an outright sale of assets, which could include the blockchain protocol and its codebase. A credible acquirer could theoretically purchase the technology and restart the project under new ownership. This has happened in previous crypto collapses, though it is far from guaranteed and has rarely resulted in full recovery for original token holders. As of today, the 23rd of July, 2026, neither a credible acquirer nor a clear restructuring plan appears imminent. For the broader industry, the lesson is clear. Investors, developers, and project teams need to scrutinize the financial foundations of the projects they support with much greater rigor, not just the technology, the roadmap, or the marketing materials. Token price alone is not a proxy for financial health. The collapse of Mvmt Labs and the Mvmt token is a painful but instructive reminder that in cryptocurrency, the distance between aggressive market hype and Chapter 11 bankruptcy can be very short indeed. As of today, the 23rd of July, 2026, the firm is in bankruptcy protection, the token is at an all-time low, and thousands of investors are counting their losses. The key takeaways from this situation are these. Understand the legal status of any token you hold before you invest. Know where token holders sit in the creditor queue in the event of a bankruptcy, because the answer is almost always near the bottom. And treat any firm filing for bankruptcy protection as a serious and material warning sign, not a temporary dip to buy into. If this video gave you clarity on a fast-moving and complex situation, please subscribe and share it with anyone else who may be affected by the Mvmt Labs collapse.